presented earlier versus now, right? So I think other than the RBI dividend, they have broadly allocated that to other revenue expenditure. And besides that, I think there's nothing really to take home. The only other point I could find was that transportation now is somehow the largest item on the RevX besides your interest payments, right? So after interest payment, transportation today is the second largest item. That share has gone up from almost 9% to 12-13%, which is a very large jump. And therefore, I think the businesses that they are doing well will continue in that space. I think the only other thing, if you want to sort of look at this, is that if you pull up the capital gains tax on an individual standpoint, but not on mutual funds, then essentially that will start creating a divide. If this stays at 20 or increasingly it goes up to 30%, then it would inherently make one asset class a lot better vis-a-vis even the alternative space. So I think that's one thing that people can take away from the entire budget things.
Okay. All right. I think, Jigar, good afternoon. Stay with us. We also want to get perspectives from companies which are impacted. We have the management of Senco Gold with us. And we also have the management of Muthoot Finance with us. Mr. Suvankar Sen is CEO at Senco, and Mr. George Alexander Muthoot is, of course, head of Muthoot. Mr. Sen, gentlemen, good afternoon. Good to have both of you here. Thanks very much, Prashant, this side. Mr. Sen, if I can come to you first. So we have a jeweler and we have a gold finance company. The effective tax on gold drops from, including GST, drops from some 18% to about 9% now. Does this spur jewelry sales in a big way, Mr. Sen?
Yes, it would spur jewelry sales in a big way. If we really look at it, the way gold prices have moved up in the last 1 year or so, it was creating a stress and a constraint in the pockets of consumers, especially the upper middle class, to come and buy jewelry. This relief that the government has given to the upper middle class would really enable them to buy jewelry, and we're all very positive about it, that the sales would go up.
Mr. Sen, two quick questions then. One, in your mind, how much do the gold prices come down by? Do you have a number, an estimate in mind? And two, are you sitting on any sort of inventory which could offset this benefit?
So if you really look at it, 9%, on a base of about 60,000, which is the international price, which 62,000 makes it to about 70 to 73,000. So the benefit that the consumers would get is around 590 rupees per gram, or 5,90,000 rupees per kilo. So that would be the extended benefit that they would get. Yes, over a period of time, gradually that benefit would pass on to the consumers. Maybe initially the benefit would be of 300 per gram, 350 per gram, and gradually move on to 550, 600 per gram kind of a benefit. That is number one. And in terms of the hit on the inventory valuations, any organized players would ensure that their inventory is hedged. So they would be hedging either on the MCX, or they would be hedging by taking gold loan from the banks. There would be some inventory which is prepaid. The duty would be already prepaid to the banks, and which could range between anything between 20-30% for a company to up to 60-70% based on how much of hedging is done by the company. So I think that those which are hedged on the MCX, there is a straight benefit, or I would say risk protection. And to that extent that it is bought from the banks directly, there would be some minimal impact. But the positive way to look at it is that the demand that would really rise up with the festive season coming in. We are towards the end of July. We have August, where Rakhi is coming in, and then September, October is the Dhanteras Diwali season. I think that consumers would be much more positive towards buying jewelry as a category, and the wedding season looks to be wonderful.
Okay, all right. So the street believed it's positive for Senco, and you're saying that yes, they're reading it correctly. But let's focus on the other stock, Muthoot Finance and other finances. They're under pressure. We have Mr. Muthoot who joins us on the show. Hi, Mr. Muthoot. Good afternoon, and thanks a lot for joining in. Well, the stock is under pressure. The street believes prices of gold will come down, which in fact could impact your growth as well as your book. Give us your first reaction.
Yeah, thank you, Prashant. But as I usually say, gold price is not the determinant for the gold loans. See, gold loan is somebody's need for money. And from the budget, I see that there is a lot of uptick in the MSME sector, a lot of business going in the MSME sector, the lot of credit requires for the construction sector and also for the affordable housing. I think that should perk up the demand. Now, to talk on the prices, yes, when the tax goes down, the price of gold generally should come down a bit. But I'm sure in a week's time, 2 weeks' time, it will stabilize and it's just a blip in the market. So that is the gold price. But of course, we are not very much concerned with the gold price, though, because the gold price is still very high and people requirement for funds is better. So, but as the previous speaker was saying, there will be demand for gold will rise. People buy more jewelry, and finally, at some point of time, when they need money, they will bring the jewelry to the gold loan financiers for funding. So no, I don't think there is any huge impact. It's just a market sentiment which is happening. So it will be business as usual, probably in a week's time.
No, perhaps, sir. But I think at a time when gold prices have been soaring, going through the roof, this relief on duty perhaps just lets you buy that little much more, right? On that, let me just go back to Mr. Sen as well. Mr. Sen, you did mention, a rough sort of impact in terms of, the grammage. Any sense on what the immediate impact on sales could be? Because this has happened before we, get into the festive season. So the timing in that sense is going to be good. It will all be sort of, once the budget is approved, it will all be put into motion. So your sense on the impact, let's say in Q3, which is when the peak season sets in?
So I think that, this 9% reduction in value will automatically enable a 10 to 12% increase in business beyond what we were expecting. Consumers would be anyway thinking, procrastinating, postponing their purchase decisions. But the moment this has come in and the uncertainties continue to remain, the US elections are in place, the war across the world is still there. And, so those external pressures will always push the gold price upwards. So consumers should jump into the opportunity, those who have weddings towards the end of the year. And I believe that 10-12% increase in business immediately in I would say in a windfall manner or an unexpected outcome of this whole budget would be there. And if you look at the long-term part of it, we shouldn't miss out, as even sir was saying from Muthoot, that if you look at the agricultural sector, if you look at the way government is trying to support the women empowerment schemes, I think consumption overall would increase with infrastructure expenditures.
Right, Mr. Sen, if I can pin you down on numbers, you'd said 10-12% same-store sales growth, 20% top-line growth for the next 2 years. Will those numbers change?
See, those numbers would continue to remain. I wouldn't really,
you will have more confidence on those numbers.
But the short-term impact, say if we talk of July, August, September, I'm sure that there will be a short-term impact on the upside.
And you said about 9 to 10% perhaps increase in sales because of this relief that's come in. Gentlemen, thank you very much. It's a quick analysis and a very helpful one. Obviously, stocks are very excited. The market is excited when it comes to the jewelry segment today. Well, let's bring back Samir Arora into the conversation. He gave us that final warning in the final minutes going into 11 a.m. Something bad is going to come. But Samir, technically, maybe you can say something bad did happen. Yet look at the market's reaction.
I think, first of all, we should say hats off to our fund management and broker community. I think they should all go and learn from companies like ITC, which have been able to convince the government that, our smokers will stop smoking if you increase the rates, if you increase any duties, and therefore the government does not increase it on cigarettes. But our fund managers and brokers come on TV and say it's a one-day affair and a two-day affair. So if you keep saying that, the government will keep responding with higher and higher taxes till you say the fine balance has been achieved. But my first thing is, it's too early to say, because I remember 2018, which even the new guys in our market will remember. On that day, the tax rate was increased from 0% to 10% long term, and the market fell 0.2%. And then it fell some 15, 18, whatever percent, and the mid caps fell 30, 40%. So it's not like that. But what I'm saying is, this is hardly the day for us to say to the government that great thing you have done, because just look at it big picture, that we have as a country encouraged investment into gold. And the whole world, including India for 20 years, was saying, move away from gold and maybe even real estate a little bit to financial assets. So on the same day, we have increased taxes and whatever, but I have one more thing. I can bet anything that the long-term capital gains tax is going to 15% in February. Because you tell me in a big picture sense, let's say 20-year story, 10-year story, everything is frozen, that the capital gains tax is 12.5%. It makes no sense.
Yeah.
It could very well have been 10 in that case.
Yeah.
So you're saying it's going up to 15, but Samir, just very quickly, I think we'll have the FM speaking very soon. It's just very, very quickly. So are you saying that like 2018, maybe we could have a delayed market reaction? But it's a very different market. I mean, look at who's driving the market. 40,000 crores coming into mutual funds every month.
There is no delay. There is no delay. It can't be falling that much, obviously. That much it may not fall because that time you are right, there were less foreigners, more foreigners, this, that, whatever. And actually the 2017 rally was also very big. But to say that everything is okay when you've increased all the taxes, but more than that, broadly signaled that there'll be another hike in Feb, according to me, because 12.5 is an odd number to have. If it was only this, you might as well have kept it at 10. It would not have made such a material difference to the world. So the good thing is the fiscal deficit, which is a very good number. Yeah. The second good thing is any word you say about tourism, doesn't matter whether it's one or two temples or two places. Every day we should invest in tourism because it's the easiest thing to do. I don't know why that is not made the number one sector of India, not in terms of my stocks, but in terms of where we have to focus, because there is so much low-hanging fruit. Just clean bathroom, just put Wi-Fi, just put some security, some clean, and you have 1,000 places where people can go and they don't.
Got it.
But otherwise, it is okay.
Samir, you're telling us, you were telling earlier that more bad news, right? So 15% in February is what you're saying. And now, so direction of travel is higher, according to you. From a foreign investor perspective, how does it make Indian stock less attractive, or what's the comparison in that sense?
No, it's very obvious. I don't know why people come and say it makes no difference. Let us say pre-tax. Oh, everybody says pre-tax will make money. So we are, as a market, if you can just see last many number of years, the Indian market in dollar terms has been making around 12%. Okay. And other markets, the good markets, the bad markets have been making 6-7%, and the good markets have been making maybe, like US has made more, but let's say broadly 9-10%. They are not making 2%. So now on that 12%, we put an average tax. And please let us not say that the long-term tax is 12.5%. There's a surcharge. It's about 14.5-15% even now. I mean, not now.
Right.
It was till yesterday 11.9. So it will become, say, 14 point something, and say half will be 20% plus some surcharge. So you are reducing 12-15% per annum from the 12%.
Right.
So you are at 10.
Right.
So how can it not matter? Please explain to how it cannot matter that the other market was giving, let's say, 9 only.
Yeah.
And we were giving 12.
Yeah.
But when we give 10 and they also give 9, then obviously relative attraction goes down. I mean, it doesn't have to come tomorrow morning, but it is bad.
Got it. No,
and so what end game to subsidize gold?
Yeah. No, points taken. Samir, let's listen to the finance minister who's speaking, and then we'll come back to you.
One. Second, if anything, the average taxation actually has come down when we say it is 12.5%. Because we worked out for each of the different asset classes, each varied with the indexation. I'll ask secretaries to elaborate on it. But the point that we brought it down from below the average to 12.5, which is the lowest if you can look at the last several years, encourages investment in the markets. With that said, I'll ask Somanathan or who is going to elaborate, Sanjay, on the specifics.
So you had there were, I think, 2 or more parts to your question. One was on real estate and gold and other assets. So earlier the rate was 20% with indexation. It has now been reduced to 12.5% without indexation. If you assume that the rate of return on real estate is typically above 10% per annum, and if you take inflation at about 4% per annum, the real rate of return was earlier, let's say, somewhere between 6 and 16% per annum in real estate. If it was 16%, 20% of 16% was being taxed. The effective rate was 16%. It has gone down to 12.5%. If the rate of return was 10% per annum nominal, it has also remained approximately the same at 12.5%. So actually there is either a reduction or no change in respect of the effective rate of tax on property and gold. Now, as regards the equity, yes, it has gone up from 10 to 12.5, but you'll also find that unlisted equity has gone down from 20 with indexation to 12.5 without indexation. Basically, we have a very, very simple, easy regime. All listed, all unlisted are at 12.5% long term. And all are at 20%, equities are at 20% and everything else is at applicable rate for short term. So yes, short term has gone up, and yes, long term has been rationalized. It has not necessarily gone up. And Sanjay, would you like to add anything?
One point I would like to add over here is that we also need to keep in mind as to the kind of people who are actually paying these taxes, the capital gains on the securities, the listed securities especially. And so over there, when we did this analysis for the year 22-23, we found that about 88% of the tax is actually coming from people who have an income of more than 15 lakh. 61% of that income is actually coming from people who have an income of more than 1 crore.
That is income on capital gains on this.
And we are all aware that otherwise, the standard rate is, about 30%. And for some, it can go up to 39%. So this marginal, very small marginal increase is actually impacting only those, primarily those who have an income of more than 15 lakh rupees per year.
Okay, number 3.
On capital gains.
Ma'am, Timsi Jaipuria from CNBC TV 18. You announced a very lucrative new tax regime with changes in tax slabs. A lot of new changes are there in the income tax side, on the revenue side. And in the speech, you mentioned that revenue foregone will be around 29,000 crore rupees, whereas government will now try to mobilize around 30,000 crore rupees. What will be these revenue mobilization measures, and from where do you think this foregone revenue will be recovered? If you can highlight, where are you foregoing the revenue and where are you going to recoup this revenue from?
First of all, it is not just because we've mentioned it in this budget, but the attempt to widen the tax net is something which we've been repeatedly saying, that India's tax net will have to be widened, whether it is in the direct taxation or indirect. Second, there are also now the PSU dividends which are improving because their valuations have gone up really high. And their performance is also now substantially increased. So revenue mobilization is not just tax-based, you have non-tax revenue mobilizations which are also coming up. Then we had, for almost now 3 years, been talking about asset monetization, which is not selling of assets, but optimum utilization of those assets which are lying in the form of unutilized stadiums or land which is available with PSUs which can be utilized for better purposes. That's a third one. Fourth, you're also looking at generating resources from newer areas. So in all those, the revenue is going to be mobilized better, and as a result of which the revenue foregone will be now made up for, is our expectation. We've said that in the budget. In my speech itself, I mentioned it. And I'm sure there are secretaries who will want to add to it. Sanjay?
Ma'am, I'll give the details. 37,000 crore, 29,000 crore in direct taxes and 8,000 crore in indirect taxes. So 29,000 crore direct taxes primarily comprises of three taxes, which is the increase in the STT only on derivatives, which is only on futures and options. And secondly, the buyback tax, which is to be now done in the hands of the recipient. While on the one hand, it will rationalize the tax and be more equitous and fair, because those who should be paying the taxes, higher taxes, in the higher income groups, they will pay higher tax, and those who are in nil tax category or in lower tax category, they don't have to pay a tax or a lower tax. While it does that, at the same time, it does bring in some revenue also, about 4,000 crore. And remaining, about 15,000 crore should come, from the capital gains taxes. On the indirect taxes, we are losing, as I said, about 8,000 crore primarily on the reduction in duties, especially in gold. There is a huge reduction from 15% to 6%. And then there is revenue foregone because of the personal income tax rates and the standard deduction being allowed in the new tax regime.
280, please. Backside, please. Give the mic.
Good afternoon, ma'am. This is Surabhi from Business Today. Ma'am, the angel tax has been abolished, which is a very welcome move. But just wanted to understand that one of the things the angel tax was also doing was checking money laundering concerns. So could you explain how these will be taken care of now? Thank you.
Thank you very much, and I'm glad to hear it is welcome. You've been raising this issue, as with many others outside of media also, saying, are you considering it? Although it was introduced during the UPA government, and it was introduced in 2012. 2 years had passed, and since after that, when we came in, we tried keeping as a good governance principle, government being a continuum, the tax continued. Although we tried giving carve-outs for startups and also making it simpler, bringing parity for the non-resident Indians, the way in which they've been treated as opposed to the Indian investments and so on. Today we've announced that we will indeed remove it. Exactly the details, Sanjay, would you want to elaborate on it?
Yes, sure, ma'am. So we should be aware that this is actually a tax measure. It's not really a money laundering issue, but money laundering issue was being tackled through a tax measure. So first of all, I want to clarify that this tax, there are other provisions in the income tax itself, first of all, to find out the source of these funds. Number two, there is already, the Prevention of Money Laundering Act, which continues to be in existence. So if there is money which is being laundered, money, being paid as a bribe or for use in, other purposes for terrorism, etc., there are enough laws, including the Nyaya Sahita, Bharatiya Nyaya Sahita, and the Prevention of Money Laundering Act to take care of those issues. While on the other hand, now some genuine money for investment, actually, there is this deterrent provision no longer exists, while provisions for money laundering remain, and they should be sufficient to cater to it.
And I would add that there are also certain provisions of the Companies Act which can be invoked if there is deliberate undervaluation of shares. So there are other legal remedies. The balance here is between preventing money laundering but accidentally also preventing investment. So that balance is what we are seeking to get it right.
211, backside. Yeah.
Hello, ma'am. Prakash Pedashi from ET Now. My question is, will the increased STT be applicable from April 1 or prospective? And if from April 1, will there be retrospective tax calculation for the increased amount?
It's not retrospective. It is with effect from 1st of October 2024. So we are giving sufficient time for the exchanges and the people, who collect this tax to put their systems in place to be able to collect it. It's not retrospective, it is prospective.
13. 11. 11.
Ma'am, Karishma here from Business Today. Ma'am, congratulations to you and everybody. Ma'am, my question is on this special assistance to Andhra Pradesh and Bihar. 15,000 crore is the number that you've given for Andhra Pradesh for this financial year. Is there further assistance that you are looking at, or is it going to be need-based in terms of the amount?
I've already mentioned in the budget speech that 15,000 crore is coming through the multilateral development assistance, which we borrow from the multilateral banks, whether it is World Bank or ADB or AIB, whatever. And I've also ended that paragraph by saying further assistance will also be extended.
Okay, well, that's the Finance Minister. And we'll keep going back to the FM as they continue to address specific issues, really, which have been addressed and which have been sort of announced in the budget. But Samir is back with us. Samir, okay, I think Samir will be with us in just a bit, and we'll be able to go across to him. I just want to take stock of the market, which is down 42 points. Market breadth is almost absolutely unchanged. I mean, 1,300 stocks are higher, and about 1,300 stocks are lower as well. It's a long list of PSU stocks which are facing the brunt. They're down anything between 5 and 7%, along with, a few others like gold finance companies like Manappuram, etc., which are selling off about 6%. Samir Arora is back with us. Samir, thanks for joining back. Just complete those points, that you were making. Interesting kind of direction you were going.
Sorry, I forget which one, but I was saying big picture.
Yeah.
That if the system can understand and accept that, if you increase duty on cigarettes a little bit, then the gross collections go down because there is a sensitivity and elasticity. At some point, they have to do that for STT stroke capital gains taxes. Because just because our fund managers come on TV and say it doesn't matter, doesn't mean it doesn't matter. It matters. And there'll be that sensitivity at a point. But I think as an industry, we've been unable to convey that. Because the cigarette guys have been able to convey. That's why even when there is a need for taxes, cigarettes have been spared again and again. And we increased long-term capital gains by 2.5%. And I was saying one more thing, that 2.5%, and not just 2.5%, but the fact that it's a non-round number of 12.5% makes me feel that this is going up more to 15 maybe, or whatever, maybe 15 only. But it is definitely, this 12.5 is too much in between, and it's not a round number for it to be a long-term number for a long-term capital gains tax.
It's going up to a round number.
What I'm saying is normally taxes are not like this.
Yes.
That, that's what I meant. It'll be rounded up to 15.
We had these numbers. We had Ramdevji earlier with us who was talking about how dividends, he was comparing dividends and buyback. He was saying that, well, why should companies give out dividends now because of what is happening?
No, in fact, I heard that.
Yeah.
I think you guys clarified that it will be taxed as equivalent to dividend.
Yes.
So now there's no difference.
The arbitrage has gone away. But you know what? Another point that Mr. Ramdeo made was that capital gains tax can be handled as long as there is capital gain. Now,
this is all story. I don't do stories, please. Even though Ramdev is my friend, I don't do stories. What does that mean even? I don't understand. As if other markets are giving negative returns. They are giving lower returns than India. But it's not that they are negative returns. And we can't keep looking at China in that sense, because if you look at China from 2010 to 2020, it outperformed India.
Samir, you made the argument on dollar returns. Big picture, next 2 to 3 years. Okay, so big picture, next 2-3 years, you're saying that the Indian market will at best give you just 10% return per year?
No, I don't say that. All I'm saying is that every time we do this, we reduce the relative attractiveness of India. That is all I'm saying. And that matters. It may not matter in 1 year, but it matters. According to me, in the last 5 years, we may think India has done well, but it has mattered in the sense that the foreign flows have been less. And why should foreign flows be less? Why should both not be there? You are making it less attractive. And at some point, the STT has to be counted in the taxes collected from the capital market activity or whatever, stock activity. We can't have those two as separate because the private equity guys are not giving, the real estate guy might be giving in some form, but private equity guy is not giving you STT. Then why should we compare our taxes with him?
Point taken, Samir. Yeah, I mean, there is taxation which has gone up and, sort of made sense of a lot of that. Samir, thank you very much for joining us. It's a pleasure having you here and hope we can speak again soon on some of these aspects as views get settled and, if there is any fine print, etc. It doesn't look like it. I think it's already pretty settled in terms of what has happened. We heard it from the finance minister earlier. And of course, some of the secretaries there. But 30 points lower on the Nifty. We're at about 24,476 in terms of closing. Nifty Bank ends up 500 points down. That's a 1% cut. Doing much worse off as compared to the Nifty. 51,758 on the Nifty Bank. And I think the broader market will come up on your screen as well. The mid-cap and small-cap indices. Mid-cap index ends about 0.5% lower. And the small cap index ends 0.84% down as well. Lots of pockets of sort of stock moves. To be sure, some positive as well. Gold was one sector which was flying through the course of the day. Guys.
So Titan was up 6.5%. ITC was the top gainer. That also rallied 6.5%. Generally consumption. So pull up the Nifty FMCG index. That had a gain of 2.5%. Names like HUL, Tata Consumer, higher. IT, not bad. It's a nearly 3% rally coming through on Infi and HCL Tech. Those two heavyweights. On the losing side, cuts on private sector banks like HDFC Bank, IndusInd Bank, Axis Bank, Asian Paints on the back foot today, and Bajaj Finserv too, down over 1%.
Okay, if we talk about some of the gainers on the mid-cap screen, and apart from the biggies like ITC and Titan, some of the companies that have exposure to Andhra, like NCC, for instance, 7% higher over there. Some of the travel and tourism plays like Thomas Cook have been up and about. Easy Trip about 5-6% higher. So those are some of the major ones. But otherwise, jewelry was shining bright from large caps like Titan all the way down to a Thangamel jewelry. Those are the stocks that were up and about. Team Lees and all the talk of upskilling. That stock was up about 12.5 as well. Quick check on PSUs because that's where a lot of money was coming off. Look at Aircon 7% down, Railtel 5% down, RVNL, IRFC, Hoodco, NBCC. PSU party cooling down today.
Oh, that's right. There were a few more stocks that did well. Indus Towers was up and about in today's trading session. There was an official MSCI announcement that was out. Expected flows in the next few days, 24th, and it'll be effective from 25th out. So that stock as well did pretty well. Suzlon was up and about. That was up close to around 5% in reaction to its numbers. We'll speak to the management tomorrow as well. And MTNL, the stock, just in the last 1 month or so, has doubled. So that's the way that one has moved.
Okay, I think that's the market close, and it's not a bad close at all, but it is sort of, the day of the budget, 30 points down and nothing. 24,476 is where the index is finally left off at. It's a wrap on at least the market programming here from all of us. Thank you very much for staying with us through the course of the day. But programming will continue. Lots of important interviews, lots of important interactions and perspectives continue to follow here on CNBC TV 18.
Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing us.
Right on Dalal Street as the Sensex Nifty recovered in late trade after a sharp drop. Union budget has hiked short-term capital gains tax to 20% and long-term capital gains tax to 12.5%. It's also hiked the securities transaction tax, that is STT, on the futures and options segment.
Real estate stocks slide as the sector loses the benefits of indexation, but long-term capital gains tax has been reduced from 20% to 12.5% on property. Short-term capital gains tax on property sale unchanged at 20%.
Shares of Titan and other jewelers rally after the government proposes to cut the customs duty on gold and silver from 15% to 6%. But shares of gold financiers struggle as the fall in gold prices is likely to reduce growth visibility.
Shares of ITC rally in trade as the budget leaves the tax on tobacco unchanged. A potential recovery in rural demand can also boost the FMCG business.
Well, it's been a busy day. Hello and welcome to this budget special. So over the next 30 minutes, we hope to wrap out everything which happened, what matters to you, what matters to markets, investors, corporates here, sector by sector, measure by measure. And we'll have our research team to help through the course of the next 30 minutes. I'm Prashant. With me, Surabhi Padya. Surabhi, hi.
Hi, Prashant. And the big headline was that hike in taxation. Capital markets did get a jolt, a dual jolt, if I may say, because capital gains tax has been hiked long-term and short-term, and the securities transaction tax has also been hiked. Let's listen into the Finance Minister announcing these changes.
Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. Security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients.
Well, that's essentially the finance minister announcing those changes. The market reaction has been quite incredible. If you've not been tracking markets and you're looking at things now, you will not know that some of these changes have happened, that equities capital gains taxation has gone up the way it has, because the market was, I wouldn't say unfazed, but there was only a brief reaction, very, very short-lived reaction. Nifty went down almost 400 points immediately after the budget announcement on capital gains, only to recover very sharply. And in terms of sort of points, nothing at all. Nifty Bank was perhaps the bigger loser, and the Nifty, of course, lost a little bit. Mid-caps and small caps also coming under only a slight bit of pressure. We were talking about how the reaction to the election shocker on the 4th of June, actually after the 4th of June was quite incredible, because it was a one-day cut. And then, of course, the market rallied back on to newer highs. In this case, it's actually been even better if you just look at what has happened today, because absolutely nothing. If you didn't follow the news, just looked at the prices, you'd be absolutely... no one can fault if you did not guess that there has been some changes to the capital gains regime, really, which has come through. Lots of movers in terms of specific stocks and sectors, Surabhi.
Oh, absolutely. And topping the list today in terms of the way down was actually some of the larger banks.
Yeah.
The Nifty had a very flat sort of a day. The Bank Nifty was down about, 1% or so. But if you look at the rest of the market and where the gains were coming in, basically it's consumption and gold stocks. They were the toast of town. Titan 6.5% higher. Even smaller jewelers like, Senco, Thangamil jewelry, all kinds of jewelry stocks are flying because of the reduction in customs duty. ITC was rallying because obviously there's relief. There is no change in taxation on cigarettes. And in general, a lot of the consumer names saw some takers because there has been that much more given at the bottom and the middle of the pyramid in the form of even some of the personal income tax changes. The other gainers of the day included like the likes of Infosys, HCL Tech from the IT pack. Like I mentioned, Lever, Britannia, Tata Consumer, these were the FMCG names that stood tall. What was noticeable was the PSU side of the market, by the way. The capex number remains unchanged from the interim budget, and it was a cool-off day for all kinds of PSU names, including Railways, IRCTC, RVNL, and even some of the defense stocks. So those were some of the highlights. And by the way, tourism, didn't mention tourism. So if you look at names like Ease My Trip or Ixigo, the recent listing, or even some of the hotel stocks, delighted and jubilant because there's been a lot of talk about further impetus, particularly on the religious tourism circuit in North India. But let's kick it off with the big shining story on gold. Gold financiers Muthoot and Manappuram were under a bit of pressure, though, of course, the gold jewelry stocks were up and about. Abhishek is here with the fine print. Abhishek.
Well, to begin with, in the budget, gold and silver basic custom duty has been cut to 6% that it was for 15% earlier. So there is a 9% cut on basic duty that you are seeing. And this can impact the gold price, which will begin to fall or will fall in the near future. So lower price related growth does not compensate well for gold financiers. Whenever prices decline, they get impacted, that there is not much of customer who would come and want to take gold loans from them. Gold loans typically do work well when the gold prices are on the higher side, because customer gets better value of loans or more loans on their same quantum of gold. So hence growth visibility actually reduces in the near future for gold financiers, and that is why there was this acted as a negative catalyst for gold financiers like Muthoot Finance as well as Manappuram Finance, although Manappuram has just 50% of its AUM with respect to gold financing. Back to you.
No, absolutely. Abhishek, thanks very much for that. That's helpful. Stocks did well on the jewelry side and, of course, hurt on the financing side. Let's take a look at the real estate space as well. The real estate index tumbled over 3%. Sonal is here to tell us the key announcement which mattered for the sector. Sonal, take it away.
Thank you so much for that. Well, the biggest announcement was that the long-term capital gains, the rate on sale of property, that had been reduced to 12.5% to 20%. While it's a tax rate cut, the indexation benefit, that was removed, and that is something that worried the street. Now, indexation is nothing but an adjustment made to cost of acquisition, adjusting for inflation as well. This would mean that for legacy properties or properties which are really old, the gains would be higher because no indexation benefit would be available, ultimately leading to higher tax outgo, and that is something which was worrying the street. The short-term capital gains, they stay as is, and just for some context, that for properties, 24 months or more is the long-term capital gain period. Now, we spoke to a couple of experts and analysts as well. Niranjan Hiranandani, he mentioned that while the tax cut would mean better volumes or more interest coming in from the buyer for new properties, the legacy or the older properties, the sale here would mean lower gains for anybody because the taxes would go higher. Analysts and the other consultants, they indicated that this is a cause of concern because indexation benefit has been done away with, because the effective tax rate would still be higher without indexation, and that is the reason why real estate stocks, after that sterile rally that we've seen in last couple of trading sessions, ended lower today.
All right, Sonal, got that. Thank you very much. So quite a roller coaster. And from the market standpoint, the critical question is that is it all over? Has the market literally digested this tax hit in one day, and whether it can move on or not? I think we'll have to wait for the next couple of days to get that answer. Well, as we take your leave, let's now actually go across to Shireen, because she has been in conversation with the top leadership at industry body FICCI, getting their reactions in on Union Budget 2024.
Joining me now to understand how the budget will provide more confidence to industry when we talk about investment and employment and the other growth-related measures are Dr. Anish Shah, the President FICCI and the Group CEO and MD of Mahindra Group, Anant Goenka, the Vice President at FICCI and the Vice Chairman of RPG Group, Uday Shankar, the Past President at FICCI and Founder Marigold Park Capital Advisors, Cyril Schropp, Chair of FICCI's Committee on Corporate Governance and Corporate Laws and Managing Partner at Cyril Amarchand Mangaldas, and Dinesh Kanabar, member of FICCI's Committee on Taxation and the CEO of Dhruva Advisors. Gentlemen, appreciate you joining us here on the program. Anish, to you first. As we go over the fine print of the budget, and of course all of this will have an impact not just in the near term, but in the medium to the long term, especially on announcements that are still work in progress. What is the biggest takeaway that industry sees the government sending the message out?
Shireen, the biggest takeaway is, as you mentioned, continuity and stability in the growth agenda for the economy. We are very glad to see that the growth agenda continues. The focus on infrastructure, on capex, on skilling, manufacturing, agriculture, these are all aspects that are very positive for the industry, and something that portrays well for India to be able to meet its Viksit Bharat goals.
But, speaking of some of those goals, and I think the big focus area in the speech, and she started her speech with employment as well as skilling, and that's been a point of criticism, and the government trying to combat that on a front foot. The three schemes that the government has put forward, and it hopes that industry will participate and partake in those. What is your take on what the government is trying to do to formalize jobs, linking these incentives to the EPFO, and basically asking industry to up hiring as well as skilling? How do you see these schemes that the government has put forward in the budget?
It's a step in the right direction, Shireen, and it is right for the government to say that the private sector has to step in and partner with us, because driving growth in the economy cannot be left only to the government. I think they've done a number of things to help facilitate that, and it is up to the private sector to step up from a capex standpoint as well as from a skilling standpoint to be able to create the environment to be to ensure jobs in the economy, and that's what's going to drive growth. For manufacturing, if we've got to be multiples of where we are today to meet the Viksit Bharat goals, these are the right steps that will help us head in that direction.
Anant, the expectation was that more PLI schemes would be announced. That's not been the case. What the government has instead decided to do is to give some support to MSMEs, also look at creating export hubs that are linked to e-commerce, also create industrial parks and so on and so forth. From a manufacturing standpoint and specifically from a fresh investment standpoint, how do you read the budget?
So as you was shared, that it is a step of continuity, stability. I think there's a lot that has come in terms of the comprehensiveness of the budget. It covers the 9 priority sectors from agriculture to urban development, Make in India and various other areas. So it is very comprehensive. And finally, there's a lot of element of fiscal discipline that has come in, where we're seeing fiscal deficit being at about 4.9%. In terms of the manufacturing, focus on MSMEs has been important. The entire aspect of security being given to them, credit being handed out to them is going to be a very important step because they are such a large share of the manufacturing space. I think that is certainly important. And then the area that was touched upon was the entire skilling piece and various new experiments where you're looking at opportunities for first-timers to come into the job market and providing some incentives on that front, as well as internships and other areas which we've not heard before. So as Anish mentioned, it is time for us to partner with government and make sure we make these schemes a success.
Uday, lots of adjustments, which is work in progress, including the simplification of the Income Tax Act, more measures to draw in FDI, which the Finance Minister said, the government will relay back to us what they intend to do specifically. But, your big takeaway as far as the union budget is concerned.
Thank you, Shireen. So 2 or 3 things. First of all, a budget is an economic document, but it's also an instrument of, government's policy indication. And I think on that, it scores very, very heavily. I think there is a huge focus that government has put on rural area, improving productivity of agriculture and building infrastructure in rural areas, whether it is rural housing, whether it is support for women, whether it is incentives for agricultural productivity, etc. I think that's a very, very important message. And I think what I find very powerful in this budget is a balance between growth and welfare and things like employment generation.
Mr. Shroff, let me address that issue with you. This has been speculated on for months now of whether we are going to finally see this happen in this budget. But perhaps, one can argue about the timing, but the timing would never have been perfect for such a move to have happened anyway. What do you see as the medium to long-term implications of the measures announced when we talk about capital gains?
I think given in that sense, some of the frothiness in the markets, it was probably expected. So I agree with you that timing is never perfect for this. But if I can just step back and make a more general comment. So budgets these days are more signaling and they are less detailed documents because there are a lot of opportunities during the year to make changes and to adjust policy and do more fine-tuning. So I see a lot of signals in this budget. One is, I think, for everything that has been mentioned in terms of the 9 pillars of focus, employment, energy security, infrastructure, all of that. Second, I think articulating a financial sector vision. So the vision itself hasn't been spelled out, but the fact that there is going to be a financial sector vision, I think, is very important. Also, the signal that direct tax, the tax code is going to be revamped and simplified. I think that's a big signal as well. So just in terms of all these signals put together, the ease of doing business and making India an easier place to do business, I think is the mega signal of this budget, and supporting all the basic stuff for for continuing the growth story. One can also see the implications of the recent election on Andhra, on Bihar, Northeast as well. These are direct implications of the fallout of the elections.
That's right. We do have that special assistance being granted to Andhra Pradesh of 15,000 crores and measures being announced for the state of Bihar as well, crucial allies for the BJP as part of this NDA government. And you're right in pointing out very high on intent and signaling on many aspects. That's been the overall intent of the budget and the finance minister. But Mr. Kanabar, you've been with us, going over the fine print and helping clarify some of the doubts that may arise from what the budget has delivered. And again, even if you look at the stock market reaction, it has recovered coming off its intraday low, so that knee-jerk as well seems to be being digested at this point in time. Broadly, from a valuations perspective, from a flows perspective, how do you see things changing post the budget?
I think first thing, Shirin, is that there is this commitment which has been given, and I believe that it's a commitment which will actually be implemented in simplifying the tax code. So, leaving aside this 10 to 12.5%, there has been a total rationalization of classifying assets into blocks of financial and non-financial assets, short-term and long-term, and having a consistent rate for both resident and non-resident. Very, very welcome. In the context of litigation, there is an introduction of VSV scheme, a Vivad Se Vishwas scheme too, which I think should help move things forward. So I can see quite a bit of intent on implementation on a number of things. Similarly, there are changes on charity, and this whole commitment which has been given that the tax regime will be rehauled in the next 6 months, and hopefully, therefore, the next budget will see a number of changes for simplification is very, very welcome. So the way I see it is, number of changes. In fact, I had not anticipated so many changes. The memorandum explaining the provisions of changes is 116 pages long, which is quite a lot of tax work, but most of it in the right direction. Whenever there is a change, not everybody is going to like the change, but overall a very right direction.
Yes, right direction. But Mr. Kanabar, I just wanted to get you and maybe Mr. Shroff and others to comment on some of those tax-related changes, because one of the things that we've seen, real estate has been the big mover as far as the last few years are concerned, especially in a post-COVID period. And what we have now seen are the LTCG changes, and they're likely to be taxing for real estate because the indexation benefits have been taken away. So how do you see this impacting the real estate sector from here on? I'll start with you, Mr. Kanabar.
So, two things. First, indeed, taking away of indexation is a major impact. But, Shirin, what most people tend to forget is that there are two benefits available in the Income Tax Act. One is a resetting of the cost base to 2001, and indexation is post that. That resetting of the cost base is continuing. So, if you sell a house which is 50 years old, you have to take the market value as of 2001. Now you got an indexation beyond 2001 to 2024, say, that is gone. But the cost base is gone, number one. Number two, the benefit of investing money from sale of a house into another residential house continues, subject, of course, to you not having more than two houses. So while I would say this is a step back, what you are seeing is reduction of rate of tax from 20 to 12.5%. Doing away with the indexation, continuing with this whole proposition that a house for a house continues, or any other asset to a house also continues, subject to certain limits.
That's right. Mr. Shroff, you want to comment on that? And also specifically, some of the other measures announced, you talked about the abolishment of the angel tax, which has been a big peeve for many years now. In fact, I can't remember how many years have gone by when industry has been asking for the abolishing of the angel tax. It's now finally been done across all asset classes. Also, the equalization levy, which was imposed a couple of years ago, that's been done away with as well. So, Mr. Shroff, your comments on that?
No, so both these are very welcome changes and probably meets a demand that has been there for a number of years. So, I mean, that's a strong thumbs up both for angel tax and equalization levy. Coming to your real estate point, I think the market will take some time to understand the changes and the actual practical implications. In the short term, it may be a bit of a dampener, but I don't think it's going to have a long-term effect on the real estate market.
Okay. Anish, back to you now. Would you say that between what the survey said and what the budget has delivered, there seems to be now a change in the government's thinking or perhaps the government's approach to say that, look, over the last few years, we've done some record spending, and it has been record. And I mean, even today's number is nothing to scoff at 11.11 lakh crore rupees. It's a sizable amount that the government has put on capex. Would industry take away the message that perhaps that kind of record capex growth is, for now, there is a need to temper that expectation and that assumption?
Shireen, I believe the government's sending a message to the private sector saying, we've done our part, it's time for you to do yours. So that's clearly one message coming out of this. But if I were to look at the rest of the budget in context of this, the focus on infrastructure and some of the spend associated with that is very positive. So on balance, again, we feel that this is very much a growth-oriented budget in line with what has been done over the past few years and in line with the economic survey.
Anant, plenty there in terms of confidence-building measures, but I think the biggest one is the government signaling that it is not deviating from what has been its stated intent and its stated objective. It will continue down the path of reforms. Now, that ninth priority, next generation reforms, and again, sketchy in detail, because at the end of the day, you also require the states to play ball and industry to come on board as well. So all stakeholders will need to play a part in ensuring that those next generation reforms go through. But, factor market reforms that the finance minister spoke of, do you feel confident that we are going to move down that path?
Yeah, no, I think it's going to be very important for the states to play ball. We have seen some continuity and good working between governments which are common, where you have the same party ruling the same government, but sometimes states do go their own way. And there is a difference in level of speed and capability between the central government and many states. So certainly I think that alignment is very much needed. In other next generation reforms, I think climate change is one very important area that was touched upon, areas like carbon markets and so on, even new age thinking such as the nuclear power plants, which was small nuclear power plants doing R&D for nuclear and providing that energy security. I think that's another very interesting and new initiative that can help us in the longer term. So I think these are areas where the center and state have to play ball. The challenge may arise in states which are non-governed by BJP leaders.
Well, collaborative federalism is the need of the hour more than competitive federalism at this point in time. Uday, I'll give you the final closing word here. I think India is probably the only large economy where the budget continues to have this much importance, significance and relevance, primarily because it is a document that unveils the government's thinking on economic policy and future reforms. So what, to your mind, would be the big headline from Budget 2024? In 6 months, we'll have another budget to contend with, but the big headline from Budget 2024.
So the big headline for the budget is very clearly, hello, can you hear me?
Yes, go ahead.
The big headline for the budget is very clearly the focus on rural areas, focus on building productivity and capacity in agriculture, continued focus on infrastructure, not just in urban areas, but also in rural areas. Very sharp focus on backward states of Bihar and Andhra Pradesh. And of course, the focus on employment and skilling. I think employment and skilling is really, really something that could do with all the focus. And I think in that sense, it's a very powerful statement. And one final one is the fact that the government has clearly said that the stock market exuberance story is not going to be unchecked.
Well, that's the message to the stock markets. I think they had come in prepared for some sort of action as far as futures and options are concerned. I don't think the market was fully prepared for a move on long-term capital gains, but that has come. And as I pointed out, there is no perfect time, and I guess the markets have rallied so significantly. India has been one of the best performing markets in the world that perhaps the government thought that this might be the best time to roll out what has been long anticipated and long pending. Well, gentlemen, appreciate you joining us here on CNBC TV 18 with your take on the fine print of the Union Budget. It's a vote for continuity, a vote for macroeconomic stability that Finance Minister Nirmala Sitharaman has delivered in the floor of the House. From all of us here for now, goodbye and many thanks for watching. Welcome back. You're watching the CNBC TV 18 budget coverage from our budget headquarters as we continue to decode the impact of the budget for the economy and for different sectors. Joining me now is the chairman of State Bank of India, India's largest bank, Mr. Dinesh Khara joins us. Mr. Khara, many thanks for joining us here on CNBC TV 18. Before I talk to you about announcements that are likely to impact the banking sector specifically, let me ask you for your broad view on what the budget has hoped to address in terms of growth stimulating measures. How do you see things changing for the economy in light of the announcements?
Thank you very much for giving me this opportunity. And well, of course, when it comes to the major focus of the budget, what is being attempted is to have a sharper focus on the productivity and also the rural sector, SME sector. So all this is a reflection of the priorities which the government has, and also it is more for the inclusive growth which is being attempted here. And also, having said that, a very clear focus in terms of climate finance, with the energy security in focus, and also the Bharat nuclear reactor scheme which has been thought about. So I think it is